Today's editorial, Signaling Optimism, examines the policy decision of the newly constructed RBI's Monetary Policy Committee. There are 6 members in Monetary Policy Committees, 3 government nominees, Ashima Goel, Shashank Bhide, and Jayant Verma, and the other 3 are Deputy Governor Michael Patra, Executive Director Mridul Sagar, and Governor Shaktikant Das. The RBI has clearly sought to talk up confidence, ignoring the risks of inflation. Here we will discuss, first of all, the present state of inflation. Official inflation target is 4% and the tolerance band is plus minus 2%. That is, maximum inflation can be 6% and the minimum can be 2%. Official inflation target of 4% can vary 2% on either side. In August 2020, inflation was 6.69% in August, and in July it was 6.73%. So we can see that inflation is consistently above the target. Now it will help us in appreciating these inflation data, will help us in examining policy decision of new monetary policy committee. The RBI has used its latest monetary policy review to unequivocally indicate that it will prioritize the revival of economic growth over inflation. What is the priority? It will prioritize the revival of economic growth over inflation, at least through the end of the current financial year. There is no surprise in this statement. In recent time, RBI has given priority to growth at the expense of managing inflation, and it is the vindication of the same policy. Now coming to the bank's reconstituted monetary policy committee with 3 new external members unanimously voted to keep policy interest rate unchanged, even as it categorically stated that the RBI would continue with the accommodative stance as long as necessary to revive growth on a durable basis and mitigate the impact of COVID-19 on the economy. The bank's reconstituted monetary policy committee with 3 new external members. We have just named the 3 new external members. These are government nominees Ashima Goel, Shashank Bhide, and Jayant Verma. The committee unanimously voted to keep policy interest rate unchanged. What is policy interest rate? Repo rate. It is 4%. The committee has unanimously voted to keep policy interest rates unchanged, even as it is categorically stated that the RBI would continue with the accommodative stance. This is accommodative stance as long as necessary to revive growth. The main focus is on growth on a durable basis and mitigate the impact of COVID-19 on the economy, and to lessen the impact of COVID-19 on the economy. Interestingly, the MPC, none too subtly, tilted away from its inflation targeting mandate by downplaying the risk on the price pressures front when it assessed that supply shocks were mainly responsible for keeping inflation above the tolerance band for months. Why MPC has shifted from inflation targeting mandate? Inflation targeting mandate is to keep the inflation within the range of 2 to 6%, and the MPC has deviated from this mandate, and now they are giving explanation. They are downplaying the risk of higher inflation by giving that the price pressures front, inflation is due to supply shocks, mainly responsible for keeping inflation above the tolerance band for month. Now it further explains these shocks it posited should dissipate as the economy unlocks, supply chains are restored, and activity normalizes. The committee is of the view that this supply shock will dissipate. Its impact will be lessened as the economy will unlock, supply chain will be restored, and economic activity gets normalized. As part of the shift in priority, it also made bold to project that it would stick with the accommodative stance at least during the current financial year and into the next financial year. A forward-looking guidance that immediately prompted one of the new members, Jayant R. Verma, to dissent and vote against the wording. Further, the committee has said that this accommodative stance, what they have taken the policy decision today, that is on 9th, will be carried forward in the current financial year and into the next financial year also. And the wording, one of the three nominated members, Jayant R. Verma, has put his dissent and vote against the wording. While one will have to wait for the minutes of the meeting to possibly glean the objections that Professor Verma, a markets expert, had, the MPC's majority view of ensuring a dovish position on interest rates for at least 6 months has left it tame price pressures. Committee's majority view has taken dovish position on interest rates. There are two words, dovish and hawkish. Dovish position on interest rates for at least 6 months. RBI Governor Shaktikant Das went to great lengths to emphasize that the current inflation hump, as the inflation is on higher side and we draw the graph, we will find that it has risen at several points, that is hump. RBI Governor Shaktikant Das went to great lengths to emphasize that the current inflation hump was a transient phenomenon that needed to be looked through when taking measures to support the emerging impulses and helping the economy return to its feet. The increased inflation, as per RBI Governor Shaktikant Das, the increased inflation is a transient phenomena. It is momentary phenomena. It will change after some time. Through a series of liquidity enhancing and credit flow supportive steps, the central bank reiterated its commitment to maintaining stability in the financial markets at a time when the resources strapped central and state governments are expected to resort to substantially higher levels of borrowing to meet their spending needs. The central bank has taken a lot of initiative to pump liquidity and credit flow, and it is the time when the resources strapped central and state governments are expected to resort to substantially higher levels of borrowing to meet their spending needs. Central government and state government will need higher level of borrowing so that they can meet their expenditure. There can certainly be no argument at this point that the economy needs all the support it can get to recover from its 23.9% estimated contraction of the first quarter. In the first quarter, from April to June, economy has contracted 23.9%. The RBI sees a gradual recovery, forecasting a marginal growth of 0.5% in the fourth quarter that would narrow the full year contraction to 9.5%. It is the inflation assumptions, however, that cause disquiet. In the committee's recommendation, it is the projection of inflation for quarter 3, quarter 2, quarter 4. This has caused disquiet. From a projection of 6.8 quarter 2, CPI inflation, consumer price index inflation, is posited to sharply ease 5.4% in quarter 3 and 4.5% in quarter 4. These are the assumptions that has caused disquiet. In overlooking the risk that the persistence of supply bottlenecks, cost push pressures from higher taxes on transport fuels, and the possibility of food price inflation becoming entrenched pose to the outlook on prices, the RBI has clearly sought to talk up confidence. As a whole, the committee has taken accommodative stance and there is disquiet due to the inflation assumption that in coming quarters inflation will ease, and we will have to see whether that happens or not, but the whole policy has given priority to growth at the expense of managing inflation. Thanks for listening.